Sarda. Shivangi, hi, afternoon. Great to have you on the show. And Shivangi, let's discuss some of these key index stocks, HDFC Bank and Reliance, because they are the ones which are really weighing heavy on the index. When do you foresee them come back to the green?
Very good afternoon, Aisha. Thank you for having me. So we've seen that markets have been witnessing some bit of support-based buying, which is intact, but some global concerns as well as the heavyweights not holding up at the higher levels have kind of dampened the sentiment for a range-bound queue over here in the market. Overall, if you look at the heavyweights, they continue to put pressure, be it Reliance or the heavyweight in the banking counters. But the good part is that the mid cap space is somewhere holding up, as well as the PSU banking space are contributing to the bank nifty. So overall, market sentiment looks, kind of mixed right now, with the major heavy lifting done by the other stocks and the heavyweights in pressure. Looking at a HDFC Bank, we've seen that, of course, it was result sentiments that have not been taken, very well by the street, and we've seen that the stock is facing a backlash from the last 2 days. Now, there is a bit of support at 750 odd levels, but we'll want to wait and watch on this one. We could focus on the PSU counters, which are doing quite well. And, heavyweights could take a little bit of a back seat in the next 1 week till the July expiry.
Really seems to be the case. HDFC Bank, of course, weighing in quite heavy, as is the case with Reliance and Infosys. Even SBI today is not participating, 1% lower for SBI as we speak too. But the big mover this afternoon is TVS Motors after its numbers. Avi joins in with a detailed analysis on how TVS stacks up.
TVS Motors have come out with the Q1 FY27 numbers and they are very strong on all fronts. By what the street was estimating, it is a beat by 10% almost on all metrics. The net profit came in at 11,740 crore rupees, top line at 13,896 crore rupees, EBITDA at 1780 crore rupees, and the margins also expanded by 30 bips on a year-on-year basis. If I talk about the segment-wise increase in sales, so the motorcycle increased by 19% on a year-on-year basis, while the scooters increased by 36% and the three-wheeler segment increased by 48% on a yearly basis. Due to the global uncertainty, there was a commodity cost pressure which the company was facing, and to offset it partially, the company has taken calibrated price actions due to which they were able to protect their margins. They've also announced that they will be raising 1,000 crore rupees via NCDs, and the company has posted the highest ever quarterly sales in the quarter gone by and the highest ever revenue for the Q1 that has gone by. The two-wheeler electric sales have risen by 86% on a year-on-year basis, coming in at 1,29,000 units for Q1 FY27. The three-wheeler segment has also shown a very strong growth of around 48% on a yearly basis. So the numbers are very strong for TVS Motors, as the profits and top line both have beaten what the street was estimating, along with the fundraising that will further boost the capacity expansion for the company.
There's also an extra 100 crore. Thank you so much for that, Avi, by the way. There's also an extra 100 crore in other income, which is reflecting on the profitability. But even devoid of that, it's a strong profit beat coming in from TVS Motors. Shivangi, let me come to you with regard to TVS on charts. How is it looking?
So looking at TVS Motor on chart, we've seen that they've not been, of course, the price volume surge is quite well today. But overall, on a larger time frame, the stock has been resilient despite the kind of volatility in the entire space. So definitely, this one's a better stock out of the lot, and we've seen that it is holding beyond its resistance levels and comfortably trading near 3,800 levels. So, once it holds above these zones, which would be important to watch out, 3750. If it holds above 3750, then we could see an up move towards around about 3,900 odd levels with a support base of 3,700.
The auto hanks actually have been performing very well. Look at a Sona BLW, for instance. It's been moving up very smartly. Motherson, of course, or Samvardhana Motherson is one stock that, Canal as well has been flagging off for quite some time. Bharat Forge, not quite a pure play auto ancillary anymore. It's more a conglomerate and has defense exposure as well. And that's why perhaps the market has been giving it that kind of premium. But nonetheless, most of these auto-anch names are holding out very, very smartly indeed. TVS Motors, of course, is the key winner today that holding up very smartly after its numbers. We'll take a very quick break on that note. We'll continue analyzing markets on the other side. Down about 98 odd points for the Nifty futures, 24,150 is what we're still holding on to. Reliance, HDFC Bank, and Infosys under pressure. But on the flip side, there's strength for an Interglobe, for a Bajaj Finance. Ultratech Cement has been a one-way move up since its numbers. Shriram Finance is looking very strong. Eicher Motors, Kotak Bank has definitely rebounded from yesterday's weakness. And M&M as well is holding out well. Today, of course, some earnings reactions like a TVS Motors. That stock has flared up about 6%. Manappuram Muthoot are moving up very, very smartly indeed. And some of the other gold ancillaries, if you can call them that, they're the ones also holding out well. In fact, Shivangi, come in on the charts of both Manappuram and Muthoot, and do you see a sustained up move now?
So Aisha, this space has definitely done pretty well, but there are selective pockets that are to be watched out if we are talking about gold-related stocks. Of course, Muthoot and Manappuram both have seen a very good negation of the last 5 trading sessions and a good amount of price and volume surge over and about 4% up move today. But my preferred pick on this entire space would be Titan, which has been resiliently stronger out of the lot. And even on the monthly frame, we've seen a breakout with a continuation of the follow-up buying after the breakout and strong up moves containing above the exponential moving average on the daily basis as well. So Titan is definitely on my checklist, and we're looking at the next targets of around about 4850 immediately, and then 4900 for Titan with the support base at 4600 levels.
Okay, the other one which has come out with numbers is M&M Financial, and it looks like a very, very strong set at the outset. I'm just going to pull out the impairment number actually. Believe that there is a beat on that count. Well, it's at 570 crore versus 560 crore same time last quarter and 660 crore same time last year. So 100 crore added in terms of profitability right there. And when you're looking at the numbers, they're looking very, very sharp indeed. Last year, the PAT number was at 429 or 430 odd crore. This quarter, the PAT has come in at 899 crore, which is just shy of 900 crore. Even last quarter, that number was at 873 crore. So you can see the spike on the stock price. And very quickly, just taking you through the NII number as well, which is the net interest income. It's come in 20% higher on a YOY basis. It's come in at 2413 crore versus 2013 crore. Capital adequacy remains strong. No fundraise likely in the immediate term, at least basis the number that I'm seeing on my screen, which is at around 18.5%. Gross NPAs have inched upwards, some part of it due to seasonality, as is always the case in Q1. But that's really how it's shaping up. Before I go to Vineet Bolinchkar, who's also joining us, let me take a chart check from Kunal. M&M Finance, Kunal?
Yeah, it's a very interesting chart because the stock had been relatively underperformer with respect to many of its other peers. We look at 2022-23, the stock was almost at 300, 320 mark. There was a phase in 2025 where the stock moved up towards 400, but then it fell back towards 300, 320 odd range. So it looks like that the stock is ending this period of 2-3 years of a consolidation, and now the risk what starts to look attractive on two fronts. One is because of this time-wise correction, and the second is you look at the entire sector. Most of the stocks are coming out of their consolidative phases and starting to show signs of a big breakout for themselves. So we are in an environment where the entire financial services basket looks very attractive. I think in that sense, M&M Finance could be a good bet from the current levels.
Okay, that's that on M&M Finance. In fact, we're going to take a very quick break on that note. When we come back, Vineet Bolinchkar as well is going to join in on the market discussion.